Welcome to this video. In this video, I'm going to be making a stock analysis of jet.ai. Remember, this isn't financial advice, it's purely for entertainment and educational purposes. Now, what is jet.ai? Well, it is an AI player, as you can see. And what do they make? Well, as you can see, even though it says transportation and airlines over here, they don't do that anymore. They used to be involved in the airline industry, but now they're a pure AI play focusing on AI agents. Imagine you have a company and you have some data you need analyzed, but you don't have it inside the company. Then you type to your AI agent, hey, give me an analysis of this data, and that is what they do. So they're in pure play AI. Now, I have to say, I'm not a big fan of the stock, and you can see why right here. As you can see, first of all, this graph is absolutely disgusting. And you might think, well, did it trade at $2,000? No, it didn't. As you can see right down here, we have this orange S, and that is a reverse stock split, which means 225 stocks got turned into one. And this only happens when it is such huge numbers because the stock price was simply too low for them to still be listed on the Nasdaq. So I would be very, very careful with this stock if I were you, because this means that practically everybody who's bought before right now, as you can see, currently the price is here, which means we have a small percentage of people who are sitting at a profit right down here. But besides from that, 99% of people sitting with this stock is at a loss. And the reason that is dangerous is because imagine this now rises to, let's just say, $5. This means a larger percentage of people have lost less money and some people have earned money. This means the chances are some of the people who have lost money are thinking, great, now I can get out at a better loss than I else would have had. So chances are in a stock like this, it's gonna happen. You can see it happen all the time, as you can see here. As you see here, right, rises rapidly and then it falls back down. Rises rapidly, it falls back down, rises and falls. So this is a pattern. So as you can see right now, it almost happened again right here in the RSI. As you can see, the other times it happened, the RSI spiked incredibly. Now, if you don't know what the RSI is, that is the relative strength index. So something is between 70 and 50, it's in the upwards trading channel, meaning the stock is going upwards. And if it's below 50 and above 30, it's in the downwards trending channel, which means the stock is going downwards. And as you can see, it is more often than not down here. And then if it's above here, it's overbought, meaning it rises rapidly, and down here it's oversold, meaning it falls rapidly. And as you can see, incredibly enough, we don't see these huge spikes down here in the bottom. As you can see, we have some pitfalls, but most importantly, they are always up here, which means that it is never oversold because people don't have enough stocks to sell, or they won't sell it unless they get a better price. Now, the earnings in the stock, as you can see, it's really not that impressive. As you can see, they lose a lot of money. They had this one where they actually earned $115, which was 5,500% more than anticipated. As you can see, they don't pay out in dividends. And in annual earnings, as you can see, it is very sporadic. And by that, I mean, it's not even that much, but look at it, 21 million, that's basically nothing. Then 12 million, then 14. So it's not even the same. And as you can see, they don't make any proper money. And as you can see here, Jet Card and fractional programs, I mean, they did sell off everything in 20 or in 25 or 2024. So now they're a pure AI play, which makes them a bit better. But I just think that they were too broadly spread at the start, and now the company is going to fail. That is at least my opinion. And if you just look at the seasonals on this stock, it is absolutely horrible. As you can see, minus 98, minus 87, minus 19. We have two positive years, which is hardly positive at all. So I really wouldn't get into this stock if I were you, because I just think it's a bit too dangerous. Now, the technicals to this for the day is a sell, and for the month, it is still a sell, which shouldn't surprise you. And as you can see here, the analysts on this are quite interesting because we only have one person on it, and chances are they biased? In my opinion, when there only is one analyst, they are biased. So as you can see here, it's just insane that they think this stock is going up to $20. I don't think that's ever gonna happen. I think this stock is gonna be taken off the Nasdaq within the next 2 years to come. And you can see here the estimated earnings here in the EPS. Not really that impressive. I mean, it's better than the last year where they estimated to lose $97 per share, and this year they only estimate to lose $3.3 per share. And then look at the annual earnings, as you can see, it's not even that much. I mean, of course, 46 million is a lot, but it's not a lot for a publicly traded company. So it doesn't really make sense that this is publicly traded, because the only reason a company would do that would be because, well, then they would have easier to raise money. And as you can see, the market cap on this is 9.3 million, which means that the market cap, or for each employee they hire, their employer value is more than $1 million, which is absolutely insane. And as you can all see here, the basic earnings per share the last 12 months trailing is minus $104. We don't even have a price to earnings. So all in all, really not that great of a stock in my opinion. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the companies you want me to analyze in the comment section below.